Farmers always working to not only keep the operation running, but also make enhancements. And while you can claim a tax deduction for repairs, expenses improving property, they cannot be currently deducted, leaving many wondering where to draw the line. Well, the man to break it all down for us, Roger McEowen with the Washburn School of Law, with some guidance on this. Roger, always a pleasure. Thank you. So, okay, rules we're talking about when it comes to a deductible repair. What are we talking about?
Well, good to be with you, Suzanne. The rules on this have never been really that clear in terms of what has to be capitalized, meaning added to basis and depreciate and deduct over time, and what can be currently deducted as an expense. The basic issue, to break it down as easily as I can, between deductible, ordinary, and necessary business expenses that are incurred in your trade or business of farming and amounts that are spent to improve property, that's where we draw the line. If it's an improvement, I capitalize it. I add it to my basis. If it's something that it's a recurring expense, something I'm going to use up over the next 12 months, I'm going to write that off on that tax year's return.
So that's the difference right now. We're talking about from payments for new property or for payment improvements.
Yeah, amounts paid for new property or an amount paid for permanent improvements or betterments that increase the value of property, as well as amounts spent to restore my property, should be capitalized and added to basis. And there's a rub there for farmers, because if they don't improve their property, or let me change that phrase, if they don't keep their property maintained, in other words, keep a barn repaired, incur normal repairs, and they wait for a year when they have the money, IRS could come in and say, well, you let things degrade so much that now you're actually improving your property. You can't currently deduct that. I've seen that happen. So we want to repair property, keep it in well-maintained status as we go from year to year, so that we can write those costs off as we incur them.
So, Roger, at what point can a farmer, we're talking about all expenses for materials and supplies, when is that fully deductible?
Yeah, anything I'm going to use over the next 12 months in my trade or business of farming, I'm going to write that off. And tractor tires, replacement tractor tires, I don't care about the cost of those. Maybe a $20,000 cost, I'm going to write it off. And there's a safe harbor that can apply to this stuff too. The rules are incredibly tricky, but basically think of it as anything I use, I'm going to use up, that I buy, I'm going to use up in the next 12 months. I'm just going to categorize it as a repair expense. I'm going to write it off. If it's an expense to improve my property or increase storage capacity, or I get beyond a safe harbor limitation where the IRS says, well, that's an improvement now, and that's where we get into the weeds on this, then I have to capitalize that.
Wow. Great stuff. Interesting. So improvement, that's where you got to draw the line. Roger, thank you as always for all this information. Roger McEowen with the Washburn School of Law. Always appreciate him joining us.